extra computing sales merchandise for $10,000 cash on September 30th. Cost is $8,000. The sales tax law requires Dextra to collect 9% sales tax on every dollar of merchandise sold. Record the entry for the $10,000 sale. So all we're doing here is we're collecting the sales tax on the behalf of our government, whether it's for the county or the state. It says state here. So all you're going to do is you're going to take the $10,000, which is the selling price of the merchandise, and then you're going to multiply it by the 9%. And since I can do this math in my head, I won't take out my calculators, but if you take 10,000, multiply it by 9%, you should get 900. So what that means is that since the customer is paying cash, they're also going to have to pay for the sales tax in cash as well. So for the first part, we're going to enter in the actual amount of cash received. So we will debit cash for the total amount. Then we will credit the amount of the sales, and I'm not sure if it's going in sales or sales revenue. It looks like sales. And then we are going to credit the sales tax payable amount. So we'll click on that. And the sales tax payable, we just collect it on the behalf of the state. We'll remit it later on. The amount of the sale is $10,000. So because we have two credits for one for 10 and one for 900, we're going to add those two together, and the amount to debit cash will be the $10,900. And that's the first part of the entry, and we will record. Second part will require the cost of the actual sale. So the cost of these sales, again, using the perpetual system that we talked about in, I believe it was chapter 4, we're going to debit cost of goods sold for the amount of the cost of the merchandise being sold. And I'm just going to, I can't do COGS because they actually spelled it out. And I'm going to credit the, what account is that? I'm going to credit the sales, no, it's merchandise, right? So what should I credit? Okay, right. Merchandise inventory, because it's an asset. We're reducing it for the amount of inventory we sold, and I forgot the price. The cost to us was $8,000, so we did a $2,000 markup. So let's go ahead and debit the cost of goods sold, which is an expense account. Debit that, and then we will credit merchandise inventory. So our debits and our credits equal, and we're ready to record because we're in balance. And the last entry says record the entry that shows the payment of the 9% tax on the sale to the state government. So we're remitting this to the state that we're collecting on their behalf. And again, the reason why we're collecting it is because if we relied on the customers to keep track of all the sales tax, I'm not sure the state would get all their money. Let's go ahead and debit the sales tax payable. This is our current liability account. We're debiting it to show a decrease in it. We can remove the balance. I'm not sure where my account went. It's not wanting to work with me today. And then the next step was, because we're paying this money, we're going to go ahead and credit cash for the 900, and we are done. So that concludes the quick study question 2. For sales tax, record, and then I'm going to do check my work, of course, because I want to make sure I get all my points correct. And this is what it should look like in your journal. Any questions, post on Google Hangout. And remember, today is a great day to learn accounting.